Thanks so much. So, hi everybody. Let me see if this works. Hopefully it does. First, thanks so much for having me here today, and it's wonderful to be back in Canada. Have been fortunate enough to be up here several times in the last year, especially at the Winnipeg event, which I imagine a bunch of you were there for last fall, talking about energy issues more broadly in the context of Canada. I'm going to talk just a little bit today about one portion of the topic of sustainability, and that's specifically clean energy. As was mentioned, my firm, Bloomberg New Energy Finance, is a division of Bloomberg. We provide and write information and research specifically about the new energy technologies that we view as changing the world. And what I'm going to talk a little bit about today are a handful of trends that we see and where we see the world going longer term. So in terms of topics, first, I want to talk about what we call the $1 trillion market. Second, the maturing market and the nature in which money is being raised in clean energy. Third, the empowered consumer and the choices consumers can now make around energy. Fourth, I say batteries are getting sexier. I think this is an educated crowd, so you all know how sexy batteries already were. But now the evolution of the technology and the costs are making them much more exciting. I'll talk a little bit about off-grid issues and the access issues around energy. Finally, or almost finally, about the status quo equaling change and the sort of inevitability around clean energy. And then finally, about trying to put a little bit of context around all of this stuff and all the technology changes we've seen, but what that actually means when we think about climate. So first, just a little bit of level setting as we talk about clean energy. And one of the things that our firm is probably best known for is counting the dollars invested in this space. So over the last 6 or 7 years, we've seen an average of about $300 billion a year going into clean energy technologies. And just real quick, the definition that we're using here for clean energy is renewables, which is really wind and solar, geothermal, and small hydro projects. It is what we call energy smart technologies. It's biofuels. But what it's not is natural gas. I'm not counting nuclear here. It's a pretty narrow definition overall. So even with that narrow definition, you see about $1/3 of $1 trillion going in every year into the clean energy sector. And that's what you see on the left-hand side. You know, look, the pessimist might say, well, that number's not really been rising for a while. It's been relatively flat. But the good news is that when you look at that in the context of how much stuff we're actually building, the numbers keep going up. So last year, we built about 160 gigawatts of mostly wind and solar, but some other technologies as well, of clean energy capacity around the world. And you can see that the amounts that can get built each year with roughly the same amount of capital continues to rise. And that's very good, and it's a result of the fact that prices are coming down. There are a lot of different examples of this, but one of the simplest has to do with photovoltaics, which is the chart at the left just shows the cost of putting a PV system on your roof in a number of different countries. Actually, the bottom line here is the cost of a Chinese-made solar module. And I do emphasize Chinese-made because that is now where really the majority of production takes place these days. And these lines above show the different costs that you see in different markets. But overall, the trend is coming down. Of course, there are big gaps between the cost of doing solar in places like Australia and the US, but generally the trend has been down. And of course, the trend towards actual solar build has been going up very, very rapidly. Just one quick note on this chart is, you know, it is stunning to me if you look at about the 100 gigawatts of solar that was built around the world last year, about half of that was in China, 50,000 megawatts. It's just an unbelievable number. To put that in context, that's about 4 times as much as the US has ever built in 1 year before. And China's grid, you know, represents something like, I don't know, 4% of the total build that was added, 4% of the total grid in China. So China is very rapidly adding clean capacity. Just a quick point about funding, and I know that financing is a big part of our conversation here this week. Look, when we start to talk about clean energy, $1/3 of $1 trillion is a real substantial volume of capital. I realize that the bond markets raise multiple trillions, but $300 billion is a lot of money. But what's always striking to me is that even as this market has achieved real scale, the way in which a lot of clean energy stuff gets financed is still pretty rudimentary. That is, that you get it financed with a bank or a syndicate of banks relatively simply. When we think about the sort of more grown-up energy industry, like oil and gas, and you want to finance a transcontinental pipeline, the way you do that is that you go to the bond markets and you raise money in multiple billions of dollars at lower cost. So one of the exciting things, of course, that we've been tracking is the volume of green bond activity, money raised over the bond markets. About $163 billion in green bonds issued last year. It's worth noting that that definition includes things that isn't just renewable oriented, and there's a lot of discussion and some debate about what should be called a green bond and what shouldn't. But the volume of capital and the willingness of investors to put money in over the public markets into bonds is very encouraging, I think, for the sector, because one of the critical parts of clean energy's continued growth is to drive down the costs of capital. And in terms of where the country activity is, it's actually been fairly mixed in terms of where the money has been raised. I wanted to touch just for a second about what we would call as the empowered consumer, because one of the things about this proliferation of technology is that it's giving consumers unprecedented ability to make decisions about how they use energy. If you think about it, 20 years ago, if you wanted to get from point A to point B, yes, you could take a bus, or you could buy a car that would be powered with gasoline or maybe with diesel, and that was basically it. If you think about the sort of proliferation of choices you have now as a transportation consumer, do I want to have my car powered with gasoline? Do I want to have it with diesel, biofuels? Do I want to have it be electric or a hybrid? All those kinds of choices are available to you now. And of course, then there's the question of, do I want to own a car at all? Or do I just want to have Lyft or Uber take me someplace? And frankly, we're seeing among young people less of an interest in getting a car. There are similar kinds of choices available to consumers in terms of how they use electricity, because you can put a PV system on your roof. You can choose from multiple providers of electricity in some markets. There's a lot more optionality out there for consumers these days. So that's really a great thing, ultimately. More empowered consumers will demand lower cost and demand further innovation. One type of consumer that I would just focus on here as an example has been around large corporations. And this is an area that we've been trying to track much more closely in recent years. On the left-hand side, you see total volume of contracts, essentially, that have been signed by large corporates to buy clean energy. These are what we call bilateral power purchase agreements, or PPAs, where they sign a deal to literally buy electrons for use either directly at their facility or through a third party for use at their facility. And the kinds of companies that are signing these contracts, of course, there's the tech companies, Google and Apple. Those are the ones that are signing these kinds of deals to power their server farms. But increasingly, we're seeing more in different types of examples. I was in Oklahoma the other day, where Anheuser-Busch has signed a deal to basically buy power to power one of their bottling facilities. We're seeing Kimberly-Clark, which makes toilet paper. It's not just sort of the green-tinted tech world now that's doing this. Now, part of what's motivating these companies is that they've made commitments to decarbonize, and that's great. But part of it also is because they simply want to lock in a price for electricity on a long-scale period of time. If they can basically know that they're going to pay X numbers, X cents per kilowatt hour for 20 years, that reduces the risk to them and to their profitability. And they like to lock those kinds of things in. So that is a motivator there as well. As I said, batteries getting more interesting, getting sexier. Batteries serve all kinds of interesting purposes in this new energy world in which we live in. You throw a lot of variable generating wind and solar onto the grid that you can't just flick on and off with a switch. You need to find ways to fill those gaps that get created. And some of those gaps are in the very, very short term. Any grid has these sort of frequency issues on the seconds to minutes basis. Some are longer term on a days to minutes ahead basis. If you get a forecast wrong, let's say, about the sun or about wind on a given day. And then longer term on a years to months ahead basis when you have actual outages. Batteries are critically important to the continuing kind of evolution or revolution around clean energy technologies. That is absolutely critical if we're going to see more change going forward. They are also critically important to electric vehicles. And this is just a look at the availability of battery electric vehicles as we saw it back in 2008. Basically, you could buy a Tesla. The bottom axis here shows the number of miles range, and these are the different types of classes of vehicles. And we've seen, as you go forward, year on year, a proliferation of choices for consumers, one year after another, after another. I'm looking for my ride up here, which is a Nissan Leaf. It shows up at some point. But we've seen most recently Chevy Bolt coming out last year, or 2016, which is really a consumer available car in the low 200-mile range and has the potential to be game-changing. But the number of choices that are out there and coming is rather extraordinary. We see new announcements from the likes of Audi and VW and others kind of all the time now, which is very exciting. I would make one sort of qualitative point aside from all the kind of economics around EVs, which is that, at least in my view, a EV is actually a fundamentally superior product to an internal combustion engine car. And if you haven't driven one, you should, because you'll find out that that is generally true. They drive better, they drive quieter, the acceleration is better, and they require less servicing. And frankly, they're more convenient to actually fill up the tank as long as you have a home where you can plug it in relatively easily. So the question, though, is when do we hit some kind of a crossover point? Because if we're really honest about it these days, for most consumers, buying an electric vehicle is not a purely economic decision. They are more expensive in many cases unless subsidies exist to bring the costs down. So when do we get to the point where we see a crossover? So first, the good news on batteries is that battery prices have been plummeting. And I would love to say it's because of great technological breakthroughs, but a bigger part of the reason is simply the fact that we've seen a massive amount of overcapacity, which has just cratered prices. We've seen prices go from roughly about $800 per kilowatt hour down to about $225 today. And anecdotally, we hear of much lower prices than that. Our view as a firm in terms of forecasting is that you continue to see the prices decline at a much more moderate pace, but at a continuing pace going forward. So then the question is, when do you get to a point where the consumer, on an apples-to-apples basis, without subsidies, buys themselves an EV? And our view is you will probably get there sometime around here, 2025, 2026. It could certainly happen quicker. There's consistently, as we've tried to forecast solar, and we had very high expectations, and they were exceeded. It could happen much faster, especially given what I said earlier, which is that EVs are a compelling product offering for a lot of customers. So our long-term view, though, is that as we hit that inflection point, you do start to see sales for EVs really start to rise. And by about 2040, about half the cars that get sold will be electric vehicles. And about a third of the cars that'll be on the road will be electric vehicles. And we base that really purely on economic beliefs in terms of the cost crossover that we think will take place. Now, when we first put that forecast out about 2.5 years ago, frankly, people thought that was a little crazy. It was too high. But I think what's striking is how in the last 18 months, the sort of conventional wisdom around transportation has been rapidly shifting. And it's very exciting to me, I'd say. So the first sort of example I would give was this Economist cover from last summer, where they portray the internal combustion engine as roadkill. The second, and again, anecdotal example is that BP, headline from the other day, BP sees self-driving electric vehicles crimping oil demand by 2040. I mean, obviously, this is a company that sells oil. It's not in their best interest to say something like that, but that's a belief that they're starting to adopt. And of course, then the Shell CEO saying that he's going to buy himself an electric car. Again, and by the way, these words have been followed up by actions too. Shell has acquired an electric vehicle charging company. BP has done the same. So these companies are starting to view themselves as energy providers, and they're also starting to see the opportunity around electrification of transportation. Just a quick, I mean, it's kind of unbelievable, but I'm going to give about 60 seconds to the question of energy access and the 1.5 billion people around the world that have no proper energy access, and only make one very, very quick point, which is that our perceptions and belief that the way to bring these people onto the grid, or a grid, is probably wrong. It's probably not going to be necessary to simply build thousands of miles of new transmission and hub and spoke networks to get someone like this kid access to his first source of electricity. This is actually a picture from a company called Phoenix, which provides really microsystems that provide the most basic kind of lighting ability with a small solar module and a pay-as-you-go kind of system. And the reason why those types of companies are succeeding is because, frankly, they just make sense economically. A number of these markets have extremely expensive incumbent power generation, or the cost of lighting your home with a diesel generator is absurdly expensive as well. So solar is the low-cost option for a lot of these folks, and that's why we're starting to see a proliferation of various types of off-grid electric type of companies that are out there. And really a fascinating area, very exciting. Frankly, on a dollar basis, it's tiny compared to the rest of the stuff going around the world, but in terms of thinking about energy access, it's very, very exciting. One point, of course, that I make as an American coming north of the border and talking a little bit just for one moment about the US is that change in the energy sector, in my view, is now really where we're at and we will continue to be. I mean, 10 years ago, I think people would say that the power sector in particular wasn't a particularly exciting place. Things moved slowly over decades. But when you look at a picture like what we've seen in the United States in the last 10 years, it is astounding. We went from about half of our power coming from coal, that's the black chunk you see on the left-hand side, to 30%, a 20% drop in just one 10-year period, with basically almost the entire gap filled by natural gas and by a doubling of renewable generation capacity, generation in the United States. So this kind of transition is very, very substantial, and it's ongoing. And of course, one point I would also make is that we have a lot of talk back in Washington, where I live, about the importance of the Clean Power Plan and the regulations on the power sector to bring down emissions. To put this in context, the United States is about 28%, has seen its emissions drop by 28% versus 2005 levels from the power sector already. The goal of the Clean Power Plan, our federal regulation, was to get us to 32% by 2030. So we're only 4% away. We think we'll probably get another 2% closer this year and maybe 2% closer in a year or two after. So the long-term goals of decarbonization in the US are already being met when you talk about the power sector. The transportation sector is a little bit of a different story, but on the power sector side, there is a kind of momentum underway here, which I would argue has been unstoppable. And I'm going to finish on one positive and negative note for just a moment. So, the projections that I've shown and the views that we hold at Bloomberg New Energy Finance are fundamentally optimistic about the power of technology to be transformative and about the power of economies of scale to drive down costs. So as we look out towards the long term, over 2040, through something we call the New Energy Outlook, we envision a world in which the amount of capacity online essentially doubles. And you look at a pie on the right-hand side in which about half of the capacity around the world will be yellow or blue, which is wind or solar, with an important portion of that being pink, which is what we would call responsive, flexible capacity in the form of batteries or other technologies that can easily switch on or off. It's a world in which things fundamentally continue to change in a really dramatic way. And it's a fundamentally optimistic view, frankly, more optimistic on our part than what we see from the Energy Information Administration in the US, from the International Energy Agency, certainly more optimistic than we see from BP and Shell and others. But it's also worth noting that we don't think that the economics of clean energy essentially are going to save the world on their own. So if you look at what kind of path that picture I just showed you a moment ago puts us on in terms of CO2 emissions, essentially, we think that that purple line, which is our New Energy Outlook 2017 forecast, we think you're basically on a flat plateau in terms of CO2 emissions from the power sector. But what you need to do to have the power sector actually contribute to making a meaningful reduction, getting us to a 2-degree scenario, is a much deeper decline. So of course that raises the question of what do you do? How does that happen? And I guess our point is that's where you kind of have to throw it back into the policy realm and say that the technologies on their own are going to make important progress, but they won't get you all the way there. In terms of the opportunity, though, I mean, as I said, we're clicking along at about 1/3 of $1 trillion in new capital being invested every year, and we think that's probably a reasonable pace that you'll see over the next several years as well, maybe a little bit higher. But if you think about what we would call the gap between what we see is going to be invested and what we think is needed, it's about a $5 trillion gap over the next 22 years or so. That sounds like an enormous amount of money, and it's not a small amount, but if you amortize that over that period of time, it seems like it's entirely doable. The real question, though, is from the investor perspective is, will there be opportunities for projects for them to invest in? I hear a lot of this discussion about, oh, well, investors don't want to invest in this stuff. I don't believe that at all, actually. I think the private sector would love to do more and more transformative energy projects, but they won't back projects that won't make money. And those projects won't make money without the right policy environments in place. So it's an enormous amount of progress, a very, very exciting time for our industry, but there's no question that it's not enough if we think in the broader context of the climate challenge. So with that, I'd just like to say thanks very much for your time, and I appreciate the opportunity to speak here today. Thanks.